The Tax Justice Alliance Uganda has urged the government to withdraw the proposal to introduce tax exemptions on income earned from disposal of government security on the secondary market. Tax policy expert Mark Mutumba says whereas this is part of the amendment to comprehensive medium-term domestic revenue mobilization strategy to improve tax administration, the 5 tax bills should be revised to prevent unintended consequences like the increased government borrowing.
On April 9, 2024, the Ministry of Finance, Planning and Economic Development presented 5 tax bills, including the Income Tax Amendment Bill 2024, Excise Duty Tax Amendment Bill 2024, Value Added Amendment Bill 2024, Stamp Duty Tax Amendment Bill 2024, and the Tax Procedure Code Act Amendment Bill 2024 before the Parliament Committee on Finance for consideration for amendment. However, the tax bills have since raised concern in the private sector, saying it is likely to increase the appetite for government borrowing on the domestic scale and consequently crowd out the private sector and creating a diversion for capital investment in key sectors.
In promoting tax equity, that means that the government needs to stop the reliance on the small formal tax base that is contributing the highest portion of the tax burden, and also increase the tax burden across the other entities that are not necessarily paying their fair share of taxation. The management of the revenue cycle, that includes the mobilization, allocation and utilization, needs to be managed effectively. That includes the government needs to generate a lot of more income and put them in productive areas, including agriculture, trade, tourism, so that this can generate economic activity that will generate the income that will be taxable.
Civil society organizations are urging the government to reduce their supplementary budget requests, especially towards the end of the financial year, given that the most recurrent expenditure could be forecasted.
So now we're calling on the government to try and reduce from calling a supplementary. Even our preliminary analysis shows that some of the supplementary they're asking for doesn't qualify. They're asking for recurrent expenditure that should be forecast, that can be seen, it can be avoided. So we're calling government that why table a supplementary at the end of the financial year when you could actually wait and put the thing in the new budget.
According to the released draft budget estimates for the financial year 2024-2025, Uganda's resource envelope stands at 58 trillion Ugandan shillings, setting the domestic revenue target at 31 trillion shillings, showing an increment of 1.9 trillion shillings from the current financial year 2023-2024 of 29 trillion shillings in form of tax and non-tax revenues.